GDP in the first quarter. We're joined from Los Angeles by Perry Wong. He's the Managing Director of Research at the Milken Institute. Perry, good to have you on the show. Thank you for joining us tonight.
Nice to be here.
All right, Perry, 7% GDP wasn't a big surprise. Yes, it's the slowest quarterly growth in 6 years. But to put it in perspective, it's still over 3 times the US's. It's better growth than what the other BRIC countries are experiencing now. So what is your takeaway from this report? Is this just the new normal and in line with a policy of slower but better quality growth? Or is there some real cause for concern here?
I think on the top line, the number looks pretty solid. It is expected to have a slower growth. I think the government had talked about it 2 years ago and emphasized it about a year ago. And I think it's not a surprise. Falling right at the range of the consensus, I think, so to speak. And so it's not a bad number. I think I totally agree with Zhu Ming. However, if you look at some of the detailed numbers, the bottom numbers, some number does cause a concern. I think the industrial production growth has slowed and have fallen below the expectation. That caused a concern. And I think the second concern is the GDP deflator, which declined faster in the negative territory than expected. Now, what does that mean? I think would that imply that the Chinese economy is in terms of pricing terms, contracting? We don't know. I think we still need to look at some of the details. But I think the two numbers, I think, would be a cause of concern.
Okay, Perry, you mentioned that the industrial production number is weak. The report did indicate that. It was rising 5.6%. But at the same time, the service sector is still holding up. And isn't this just a sign that the economy is indeed rebalancing and becoming more of a consumer-based one, that the whole rebalancing system is working?
Yeah, absolutely. That really is the story behind it. I think it actually surprised a lot of people by seeing that the share of the service economy exceeded 50%. And that is a very encouraging sign. Now, mind that that's in the middle of restructuring in China, plus the anti-corruption campaign and also constraints, government policy constraints on official spending. Now, it comes in with all those constraints. The number does show some strength with the reform effort, if you will.
Well, another strong point was online merchandise sales. That was up 41%. And Premier Li Keqiang said that, yes, traditional sources are receding, but that there are newly emerging sources of growth. Other than online merchandising, what do you think are some of the bright spots that we saw in this report?
I thought it's another big surprise item, and this time is the positive one, is the household income growth, per capita household income growth, which is 8.9 real growth. That actually comes a big surprise. And I think better yet, the highlights, I would say, to highlight or showcase the reform effort by balancing the urban-rural economic development. The household income growth exceeded the urban household income growth. And that, I thought, is a very positive sign, a strong indication that the Chinese government's effort in balancing the gap, the economic gap between urban and rural. At least that's a very good beginning.
So the good news, Perry, household income is growing. How does the government now get those households to spend more?
That is a little bit more complicated question. I guess to name a few, one, I think just like Chinese people, just like anyone else, if there's a roof over their head, and if they know that they have enough money for their retirement, and if they find the commodities that up to their standard, I think they will do. If you look at some of the people across the border into Hong Kong to buy a lot of those quality products, and I think if the Chinese manufacturers, department store can offer those, I think they will buy. That's not a secret. I think the key is security.
All right, security. Now, the People's Bank of China has taken some moves since November. It's cut interest rates twice and has freed up banks to lend more. We are seeing the stock market respond to this very strongly. But beyond that, Perry, are these stimulus measures yielding concrete results so far?
I think it would take a little bit of time. It's always a lag between policy implementation and the results of the policy. So I would expect second quarter, the economic performance would improve somewhat. If you look at some of the lending activity, the investment is up, but then the funding of those investments are not quite there yet. So there's a way that the capital have to find its way into the entrepreneur when they want to put on a project. So that's an issue. Now, it goes back to the stock markets. I think one caution of, at least for me, is that it doesn't mean, I think, in many ways, when the equity market goes up so high, and that will represent that the equity or capital goes to the entrepreneur. I think, one, it has to be careful that whether the real sector can perform up to the expectation. I think that's the key. And we'll see if the reform policy can carry through and produce a better result in the second quarter.
All right, Perry, the markets are pretty much banking on more monetary easing. What kind of reaction do you anticipate from the People's Bank of China? Do you think other forms of stimulus could be in play here?
I thought the stimulus, I think, is too broad. If we listen carefully to what Zhou Xiaochuan, the central banker, said about 2 weeks ago in China Development Forum, that he was pretty comfortable with the economy or the rate of growth and also the monetary base of China. So would central bank to ease on the terms of quantitative easing to put more liquidity into the capital markets? I don't know. But I do think that the Chinese government can exercise prudent policy. Again, that's the word that Mr. Zhou mentioned in the meeting. So I do believe that the central banker can exercise multiple types of tools. I think in the general term, we call them macroprudential policy. So that a lot of things can be done, but I think stimulus may be a bit too heavy at this time.
Stimulus is too heavy. The government has already taken measures to boost the struggling property market, eliminating restrictions on mortgages and such. If you think stimulus is too heavy, do you think they should be doing more to support the housing market, or has enough been done?
I thought part of the exercise for reform is to tilt the markets toward a better pricing, not to create excess, so not to create too much building. And hence, if you look at sectors that had the highest growth in the last decade and a half, steel, cements, and all those are coming down. And those sectors have no pricing ability at all. So if the Chinese government want to really balance the economy, perhaps they have to stick this through. But having said that, the government can also tilt policy not to inject capital, not to put too much capital in the market by choosing some allowance for people to buy the second home with the lower down payment, for example. That's exactly what the government is doing. So they are encouraging people with the capital to ease back to the market. No, that's not stimulus, but more or less fine-tuning to encourage the purchase of property.
All right, we'll see how that all plays out. We'll be watching this very closely, of course. Thank you so much for your insight, Perry Wong, Managing Director of Research at the Milken Institute.
Nice to be here.
Thank you.
Thank you.